Hello, promoted markets. This is Ahura, and we'll be with you to review the US labor market data and market reactions. The data which covers the labor market numbers on January. As always, first, let's check the data and see then the market reaction and how we can analyze these numbers. Average earnings increased by 0.3% on the monthly scale and 4% on the annual scale, which means that when you have more earnings, the 4% average earnings is something standard and normal. Even thought if it's less than 4.1% expected, and but it's more than 3.9% in previous month, and also it's generally 4% is the normal earnings, which means that the market, at least on the earnings front, is still strong. Even thought the monthly gain of the 0.3% is something that usually is a historical number, usually historical numbers, and it's not, it's in line with expectations. Average weekly hours, working hours, was unchanged at 34.1 1 hour, which is normally, it's not in which is repeated the same number of previous month, but slightly less than 34.2 hours expected. Government's payrolls increased only 11K or 11,000, much less than 44,000 in January, which was expected again, because with the Trump administration, there is the administration which is looking for making a smaller government, make the government smaller and lower the payments, lower the cost of the government. 11,000 or less hiring is expected. Manufacturing payrolls, on the other hand, increased by 10K, much more than or two times more than 5,000 expected, and it's after 5,000 lowering them or decreasing 5,000 in January. So which means that the manufacturing sector is getting stronger. This is also in line with the new government or new administration's expectations, as they are trying to again restart the manufacturing productivities and productions in the US, especially with the tariffs that right now we have in the markets. And so which means that generally payrolls increased by 151,000, and when it's more than 125,000, which is again downtrend revised lower from 140 to 125. This 151,000 newly created job is less than 159,000. But still, it's not a big difference. Just like 8,000, sorry, 8,000 difference, which is not a big deal. So it's not a big surprise. Yes, it's a little bit bigger, but it's not a big surprise. Participant ratio increased by 62 decreased to 62.4 from 62.6. Lower, but 62.4 still. So no, it's not a big number. It's not a bad number. Private non-farm payrolls increased by 140,000. Slightly less than 142,000 expectations, but still it's almost 2,000 more than 81,000 in January. So the unemployment rate with these numbers increased slightly to 4.1%, slightly lower than 4% expected in previous month. Generally, with these numbers and with these data, we can see that the labor market slightly lower than expected, which means that labor market slightly going to cooling down. Again, it's in line with the central bank expectations, but average earnings still strong. 150K make newly created jobs still fine. 4.1% unemployment rate also still fine. So generally, the labor market is fine. Not big difference with the expected. Even thought if it's slightly less, but it's not a big deal. It's not a big deal, and it's not much lower than expectations. So generally, the labor market is still fine, but with the sign of cooling down. Going forward and checking the other data, let's check the charts. Checking the chart, we can say that US dollar index had almost no reaction to this data, because with this data, these numbers are not a positive number, it's not a negative number. But generally, the labor market is fine, which means it's not going to put the US dollar under pressure. So we can expect the US dollar to increase above 104 mark, especially with the ongoing geopolitical tensions and trade wars, which means more demand for US dollar. So these numbers, these data are not something that can move the markets, especially the stock market and US dollar market. So the dollar markets and the dollar index and stock markets, they're going to react to the other news, including the geopolitical tensions and trade wars. So if that's why, if you check the S&P 500 chart, we can say, yeah, these numbers still, as mentioned, still the same. I mean, not surprised. So the overall downtrend is can continue in the market. However, I can say again that these reactions, they are the initial reactions to the market. We cannot trust to them, but these are our expectations. So we have to wait a little bit more to markets to open the markets in the United States and see how in next 2 hours what different markets what will be the reactions of different markets to these data. But generally, these numbers, they are not supportive for the stock market. We can say that the stock market can continue the slight downtrend further. This is the same for Nasdaq. It's the same for Dow Jones. So the data are not supportive, so continuing down to a slight downtrend for Dow Jones, Nasdaq, and S&P 500 is expected. About the oil and the gold, as the market in a gold market, I mean, the US dollar index is natural for this reaction. The reaction is natural, and stock markets is negative. That can be the positive for the gold. So we can expect, I thought in initial reaction is negative, put the gold under pressure, but still it can be positive for the gold market and support the gold to hold 2,900 and go towards 3,000 in the next weeks. So generally these numbers, they are fine. They're positive for gold. They can be positive for gold. As I said, is in initial reaction, it was negative for gold, but can be positive generally. On the oil market, these numbers, they had no surprise. So they are not either positive or negative for the energy market, especially for the oil market. So oil price still can continue its side movement around 67 and 69, but generally under pressure. But this pressure cannot put the oil price much lower than this, because geopolitical tension is still alive, and we don't have clear reasons of peace talks, especially in Ukraine. So the market's still uncertain and with the geopolitical tensions. And but about the cryptocurrency market, yesterday, the crypto market was waiting for yesterday's White House can say somehow the summit or the meeting about the cryptocurrencies. US government started to have the Bitcoin reserve, but somehow the market disappointed because they are not going to buy the new Bitcoin. They're gonna use the same Bitcoins that already governments held by legal. I mean the injustice and stuff that they already had this Bitcoin, so they just gonna legally use this Bitcoin as a reserve, but they're not going to buy the new Bitcoins. I mean, thought it's all about 200,000 Bitcoins, but still, yeah. So there's no more demand in the market right now, at least in the short term. But generally, it's a positive news that legally there is the biggest economy in the world legally will have the Bitcoin reserve. So, but generally the news is a positive. So right now, 90,000 became as a pivot point technically, and holding this line higher or missing this line down can bring the next trend in the market. But generally, the 90,000 is the current main pivot in the cryptocurrency market, especially for Bitcoin. So this is overall the market data and reaction to the economic data and market reaction. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as possible. Have a good time. Bye.